Welcome to the Priority Maintenance Podcast. I'm Jeremy. I'm so glad to have Jeff Taylor with me this morning. How are you?
I'm doing great.
Good
to be here.
Yeah, I'm so excited to have this conversation. We've been having some good guests, and I've been wanting to have you on, and finally got this thing rolling, and so I'm glad you're here.
Well, thank you. Thanks
so
for having me.
You are in the banking world.
Yes, sir.
And commercial banking in specifically, right?
Correct.
What does that entail?
Well, banking consists of two or three different components that most people are familiar with. One would be mortgage, which would be to go buy your house. Mm-hmm. Then there is consumer, which is like buying a car or just need some money for bills or whatever. Those are regulated differently from commercial. Commercial is a different type of loan where we're working with individuals who are doing investments. They're buying properties. They're buying businesses. We're loaning to businesses. We can loan to individuals, but it's for a business purpose.
Right.
So that's called commercial.
And so when you're dealing with businesses, what are the rates different, and how does that? What are some of the key differences, just besides it being a difference of individual versus business?
Well, first of all, understand that on a commercial loan, the bank is holding that loan in their portfolio. Mm-hmm. They're not selling it off.
Right.
So they have a cost of funds. They have overhead. They have to pay interest on the deposits. They have to go borrow money from the Fed. They have employees. They have a building. So just like any business, you're going to have fixed costs. You're going to have variable costs. And when people come to borrow that money, we have to cover those costs plus a little bit of a spread.
Yeah.
So it's a higher interest rate typically than what you would see out in the mortgage world. Mm-hmm. People tend to look at those mortgage rates and think, well, that's what the banks are charging right now. Mortgage rates right now are at historic lows. So you're hearing below 3%.
Right.
Well, that's an incredible rate. Well, a commercial loan, we can't do that.
Right. That's not realistic. And sometimes people, I've talked to people, they think that they can get the same as a residential, and that's just not realistic because the risk is a little bit higher as well, isn't it? Typically,
the risk is going to be higher, but I think the primary issue is the source of funds.
Sure.
Because the mortgages are sold off into the secondary market. Mm-hmm. The banks, they might hold a few of them, but
they're packaging them, and that's kind of what happened with the 2008 crisis and stuff like that, is that people kept packaging them, selling them, and on that went until basically there was no one to sell them to.
Right.
So with commercial loans, is what makes the bank more money? I mean, what is more profitable for the bank, or what is the bank's long-term interest? Is it just to sell off these residential house loans, or is it to make money off of the commercial loans?
Well, this is interesting because every bank has a different personality and they have a different focus. Mm-hmm. Some banks are very heavy into home mortgages. That's how they make their money. And they still do commercial loans, but that might be a much smaller part of their portfolio. Their focus may be in the mortgage world. Other banks, they may be big big commercial lenders.
Yeah. And
that's their focus. And yes, they do some mortgages, but that's not a big part of what they do.
Yeah.
So depends on the institution. At First National Bank, where I work, we do a lot of mortgage loans. We have a big mortgage operation. It's headquartered down in South Lake, but we do a healthy amount of commercial as well.
Yeah.
So it's a balanced. We're a community bank. We're trying to meet all the needs of our constituents.
Which I think in any business, I think the balance is the key, because if you were primarily residential, then if you did have another housing crisis or whatnot, you might be more subject to taking certain losses versus if you spread that out over not having all your eggs in one basket, as the saying goes. You could,
right. Of course, people tend to go with where they're making the money,
sure,
and where the opportunity is.
Absolutely. And
in the last few years, consumer home mortgages, that's been a big moneymaker.
Absolutely, yeah.
And so,
what is on banks? what is their like pivot point? I mean, are they pretty quick? You've been in banking for
43 years.
43 years. So in your 43 years, do you see, is this like a slow moving monolith, like a big boat slowly churning, or can they pivot pretty quickly to say, hey, we're going to adjust to this?
It's fairly slow adjusting because a lot of times it's hard to read the tea leaves to see where things are heading. Mm-hmm. So you're making money doing something, you tend to gear up for that. Your infrastructure supports that kind of a loan, and you hire the personnel mm-hmm. that know how to do that. I mean, there's certain skill sets with different types of loans.
Right.
So one lender who is a good commercial lender, he can't just flip over and be a mortgage lender. I mean, there's so much
right.
in terms of regulation
sure.
and training that you would have to know. So just like with any business, you hire a staff and they have different skills. It's hard to change direction with that same staff because they know how to do a certain thing.
Right.
So, and then trying to anticipate how the market's going to change. You know, if we all had a crystal ball, it'd be great.
Right, everybody'd be making money if that was the case.
So it tends to be a slow-moving deal.
Yeah.
And, you know, I've seen it move quickly when the market changed really fast. You know, like back in the 80s, there was a big crash, you know, and it hit the oil industry, it hit real estate,
hit everything,
hit banking, you know.
So, explain a little bit what happened there, what caused that crisis?
It seems like the oil industry was kind of the leading issue there. We had the oil crisis and stuff, and we had, you know, that was fueling, at least in this part of the country, we're big oil mm-hmm. producers in Texas. So that was fueling a lot of other businesses because you have the money turning over and people are spending money, and that's fueling other businesses, and so they're doing well, and then people are buying big buildings to support their businesses and their homes. And then when the oil industry crashed, then there's a ripple effect. So it doesn't hit them all at the same time, but over time it hits them.
Yeah.
And it was a big deal. It took down a lot of banks. And
in the 43 years, we've talked about this before in our discussions, but you said that you feel like that was one of the worst crises that you had gone through mm-hmm. in terms of banking and things like that.
Correct.
What set that aside versus, say, 08, 09, the Great Recession, or maybe the dot-com bubble? What was it just that banks, their vulnerability was greater at that time, or just?
I think that's a lot of it, but the end result was there was a lot of banks that failed. Mm. There was a lot of banks that were bought out, or they were taken over by the government, and then they were sold off, and so there was consolidations. And so,
which you saw that in 08, 09, 2010 too, but not to the extent.
I didn't see it to the extent I saw it back in the 80s.
Do you feel like in that same vein that the adage goes that if there's more competition, then the consumer wins, right?
Correct.
And do you feel like the competition has shrunk in the sense that there's more big banks and they've bought in smaller branches and things like that, that the competition is not as great and that the consumer is feeling that, or how does that play into effect?
Absolutely. I do think that's the case. Here's my analogy. You can go to get a hamburger, and you can go to McDonald's, and you know what you're going to get, and you know what the price is going to be, and it's going to be consistent, and they serve a certain need in the community, and they do a good job of it. But if you want to have it done a certain way, and you want to say, hey, can you cut the pickles and add something special on it, or cook it a different way, they're not able to respond to that.
Right.
You would need to go to a local, hamburger shop where they can do that. So you're going to get a different quality. You're going to have a different price point. You're going to get a different level of service. It's the same in banking. You have these big banks like the Chases, Wells Fargo, places like that, and they're geared to doing things in a homogeneous way. They're regulated so that they have to be very consistent across the board.
It's a cookie cutter process.
It's a process.
Yeah.
Plus, they make a lot of their money on loaning to the big guys, the big heavy hitters.
The hedge funds and things like that.
Exactly. So they have a little bit different focus. They still provide the service to the consumer, but it's like a McDonald's kind of a process.
Right.
Whereas the local banks can be, they can meet the individual needs more. They can be a little more flexible. They can look at situations. The regs on a smaller organization is a little bit looser, a little bit, not quite as tight. So,
so there are varying levels of regulation versus size of banking?
Yes, depending on the size of bank you are.
Oh,
So if you get up to a certain level, there's new regs that kick in.
Sure.
I was at a bank one time that had, a dozen separately chartered institutions under one holding company. Well, all those institutions were smaller, and they were regulated a certain way. Then they decided to consolidate those charters into one bank.
Wow.
Well, that kicked them up to a new level.
And they didn't foresee that?
I don't think they thoroughly, the unforeseen circumstances kind of thing. They knew things would be different, but I think they thought they could continue to operate exactly like they always had.
Right.
Well, it became pretty apparent. No, we
So
can't.
did they reverse their action on that?
Oh no, they had to adjust to it.
They just went along.
And you started seeing them being more concerned about, in this community, because, all these different banks were in different communities.
Right.
And they were in kind of a geographic area of the state, but one community might do things one way, or one individual bank in that community did, and this one over here did it a little different. Well, now you can't do that. You have to be doing it the same way.
Yeah.
Which means everybody had to adjust. They had to come up with a common standard. Well, I don't know that they foresaw that.
So is banking based on branches? Like, do you guys have unlimited? How does that work? Do you guys borrow money and then take that at a certain rate, and then you take that at a percentage on top of that, then to lend it? Is it like a chain of events, or do you guys have your own money? How does that typically work?
It's different for every organization, every institution. Deposits fuel most of what you have available to loan. So that's why banks need depositors. They want those.
So they want
accounts.
people to save money.
Oh yeah. They want checking accounts. They want savings accounts. They want CDs.
Right.
And some banks are flush with cash,
Mm-hmm.
and maybe you've got this ratio of loans to deposits. And if you're loaned up where you've used up all the deposits that you've generated, then you've got to go out and borrow from the Fed. And that's where that interest rate is set by the Fed. When you talk about the Fed's borrowing rate, that's what the banks are borrowing from the Fed.
Gotcha. Yeah.
So the banks have to pay interest on their deposits and on the money they borrow. So right there, you've got a cost of funds.
Yeah. So you have a fluctuation there that you have to make sure everything streamlined is out and everything balances out.
And not just
So with that, I mean, banks are wanting to lend as well because that's how they make their money.
That's how you make your money.
So does the banks typically, do they hire people to like go out and find people, or like, hey, do they have salesmen saying, hey, we're wanting to lend money, let me see your project so we can help you with that?
Absolutely. And that's always been interesting to me because typically your lender is your marketer. Mm-hmm. They're out there, they're supposed to be cultivating business. And you have two types of people. You have the extroverted salesman type of guy who's good at going out and generating leads and generating opportunities, but he may not be the best analytically. Mm-hmm. He may not have the best skill sets on what's a good loan and how to get the loan put together. Right. Then you have those guys that are good at that, but they don't tend to be the good sales guys.
Sure.
So over the years, I've seen this. It's a constant trying to get the right balance of your team, and it's an interesting thing to observe.
Yeah, I would imagine.
Plus, you have a marketing department
Sure.
typically that
Really
doing your advertising.
Banks do.
Sure.
I typically don't even think about that. I mean, I see I think the marketing. I mean, to be fair, I think the marketing's pretty poor because I don't think the marketing has really changed over the last 20, 30 years. I mean, they do billboards and, some TV commercials and stuff like that, but they're not like punching into the consumer like on a personal level oftentimes. I mean, because people know, hey, if I need to buy a house, I need to go to a bank. So, I mean, I don't think there's any marketing that needs to take place there. I mean, people know just based on actions, for my car to run, I have to go to the gas station, so to speak. I mean, but what are some of the marketing campaigns that you've seen that maybe have shown greater success, or do you feel like that's a weak point within banking as well?
Well, it depends on the institution.
Mm-hmm.
Some do a really good job, others not so good. When I say there's a marketing department, it may just be one person.
Sure.
Or maybe some banks, if they're kind of small, they may hire an outside firm to do it for them, and your bank president's kind of working with them. But it depends on the focus of the bank on how they want to market. So, for instance, if you're a commercial bank, it doesn't make a lot of sense to be putting out a lot of ads that reach the masses of people who want car loads and stuff.
Sure, you want targeted ads.
Targeted.
Yeah.
And so, same with mortgage. You want to target where that activity is going to be generated.
Right. And based on analytics and things like that, I mean, they've finally honed that skill, really.
So what you and I might observe and think, well, that doesn't seem like that's a very good campaign or whatever, but we're not really seeing the analytics and what the response rate is and who they're reaching. And, sometimes it's a shotgun approach and sometimes it's a rifle.
Yeah.
And I think a lot of times banks use rifle approach, especially on commercial. You want to be out calling on the individuals,
sure,
one-to-one.
Targeting.
And saying, hey, can I help you?
Yeah.
Do you have an opportunity? Do you have a need that I can help you with?
Sure.
Whereas if you just put it out there, they may not come in your bank. You have to go out and kind of engage them.
Yeah. So let's go back to the beginning. How'd you get into banking? How did you decide, hey, this is what I want to do?
Well, it was my dad. He made a connection with a fellow that he said, son, you need to get you a job. You're about to graduate high school, and hey, I've got a friend that said they could use you at the bank. And I thought you had to have a degree to work in a bank,
Sure.
And I'm not even out of high school yet. So to make him happy, I went on the interview, and it was for a really cool job. It was called the Silver Vault Teller, and I was in charge of all the silver, the coinage.
Wow, that's cool.
And it was my job to supply all the tellers with their needs and to keep it rolled, to keep it sorted, balanced, and it kind of worked by myself, but I had to go out and engage with all the tellers every day, make sure that their needs were met. It was a great job for
especially in high school, yeah. And then you stayed with that through college. You started college.
Yeah, and then I moved. I stepped up and became a teller,
mm-hmm.
and I was what we call the late shift, and it was called a part-time job, but I was working 35 to 40 hours a week.
Sure.
And it was a great experience.
And so, based on that experience, you said, "Hey, I could see myself doing this for a living."
Well, it's kind of like a lot of people. You get off into a path, and it tends to take you down that path.
Yeah.
And that's what you're being exposed to, and the people around you, and they're saying, hey, you could do this job, and you're seeing them be successful.
Yeah.
And when I got into banking, it was a little different. It was really a little more fun than it is today. And
I think across the board in jobs, I think that was the case. It just seems like it was more lax, that people were, not everything was so like
rigid,
go,
yeah,
and rush.
And it changed. My career took place at a time when there was a lot of changes in the banking industry, and not all of which I certainly couldn't foresee them, nor if I had known about them, I might have made a different choice. But it's been a really good career, and it's been good to me. I've enjoyed aspects of it. There's aspects that I don't enjoy as much.
Yeah, I think that's every job.
Yeah. So I'm very thankful for it.
Yeah. Yeah, it provided a good living, and what have you seen? How has banking changed based upon government regulation?
Well, of course, government just continues to add regulations.
Yeah.
And
do you feel like it's overreaching? Like it's just because sometimes I think, especially with government, what they tend to do is that a problem might arise and they overcorrect instead of just say, okay, how can we just fix this issue and fix the issue and then step back. They tend to on different matters just like consume the matter and just overwhelm it.
Oh, they've definitely done that. And for instance, they've put a limit on how much the fees can be on a mortgage loan.
Wow.
I think it's like 3% or something. Now, I'm not a mortgage lender, so I'm not real versed in this, but sometimes that makes it hard to help the consumer because if it's a smaller loan, certain fees have it has nothing to do with how big the loan is. I mean, it costs so much to do an appraisal, period.
Yeah, right.
Whether it's a $50,000 loan.
So they're not giving you that spread to cover your costs.
So what that does is it makes it unprofitable sometimes for the bank to say, well, we can't be doing these little loans.
So less people are getting loans.
Yeah. So it makes it harder.
Which is interesting because in and of itself, the market would regulate that in and of itself.
Exactly.
The government doesn't need to regulate that. The market would regulate that based upon competition with other banks.
Right.
So if you had 10 banks and all their rates are visible to the consumer, that consumer can then choose that bank based upon 1, the rate, and then 2, the risk, and then 3, just based upon the risk of that individual, only certain banks will be applicable.
See, I wish that's where the government would focus their efforts more, is that just on transparency of the banks so that people can make good decisions for themselves instead of trying to engineer a result.
And do you feel like there's a disadvantage to smaller branches versus larger branches, or do you feel like the advantage goes towards the smaller branches than, say, the conglomerates of Chase and Wells Fargo?
I think there's a role for each. The small branches might serve an aspect of the community, and it's going to be more limited in the services that they can provide, but they're meeting the need of that area.
Right.
Whereas a large branch is going to be all kinds of services. You can go in there, and it's kind of like going to a department store.
Sure.
So there's a place for both.
I actually feel like the larger branches are more constrained in their lending practices than smaller banks in a lot of ways.
Well, they tend to be because they tend to be part of a bigger organization. And when we get back to that, they've got to have that homogenization.
Mm-hmm.
That everything has to be done the same way. You've got to follow these certain procedures. And there's just less where the employee has some latitude to make decisions. They've got to follow the procedure.
Yeah, to the letter.
And they're churning employees a lot of times, so they can't afford to let employees use their judgment. They've got to say, you got to follow.
And do you feel in the banking, is there a high turnover rate within banking, or?
It depends on the organization.
I never really.
And it depends on the role.
Mm-hmm.
There's, like teller jobs tends to be a big turnover because, first of all, that's kind of a stepping stone job. People get into it for a while, but they're moving on, especially if it's a young person. Maybe they're going to college or whatever. And
now, does banking in the banking institutions that you've been through, been with over your years, do they provide like a ladder for people to say, okay, here you are as a teller, do this, and do they provide that ladder of like transparency of this is what you got to do to get to here, if this is really the path that you want to take, or do they just say, you're a teller, and let them figure it out?
It depends. Again, it depends on the organization.
Mm-hmm.
A smaller bank is going to have a harder time providing that ladder because there's just not that many opportunities.
Sure.
No matter how good the employee is, if you don't have the job openings to offer them that path,
Yeah,
You can't manufacture that.
sure.
But if
Unless
you're-
the banking and that banking branch is growing, right? If
Right.
they're adding more branches and things like that.
right.
And who determines that? I never really thought about that in that sense. Is like most banking, are they family owned? Is that how that works, or are
Fewer,
they
fewer and fewer. There's
hedge
still,
fund owned, or I don't know how that.
Usually,
what that is.
it's people own stock in banks.
Okay.
Typically, and a lot of times you try to get people from the community to support a local bank, but then when you start getting off into these corporate banks, they're traded on Wall Street kind of thing.
Is there so the family bank is really non-existent anymore?
No, it still exists.
still there?
but it's not.
They're just shareholders.
There's not as many as there used to be, and there are some banks that are predominantly owned by one family still to this day.
Yeah.
But they're usually in small communities. They're not going to be the bigger banks. They're going to be just a smaller local community bank.
Yeah.
You just don't see it as much as you used to.
So dealing with what are your one of my frustrations is, and I had talked with a guest, the previous guest, about this, and it's one of my kind of pet peeves with things is the lack of education with high school students when it comes to real world living. As a banker, I mean, you and through 43 years and being in banking, one, I think that, the family structure has definitely changed. I mean, we have an over 55% divorce rate, and so families, there's a broken family and things like that. The school system's different. I mean, so obviously things have changed in the sense of what a high school, a senior graduating, in the 70s versus a senior graduating in 2021 is. But what I feel like is that they're not getting the basics of how to live life. And in that, banking in and of itself. If you were, what would something that you would like to see, like the education system, I mean, how would it help your job even as a banker, or, to have some more education with these children? What would be some things that you would change?
Well, I think it would be beneficial to have a course in the high schools that talks about personal finance, because there's fundamental things, understanding how a checking account works, understanding a budget, understanding why you have to pay interest and how long it takes to pay back a loan. I mean, that would be beneficial, but I don't know how much of that is being taught in the schools. I don't know.
Really. I mean, I know that they have courses that they can take, but they're more like elective courses instead of prerequisites. Mm-hmm. I just think that there needs to be more focus and specific attention given to, hey, this is real world stuff. This is going to help you in the future. I mean, because what is the typical age? I mean, you might not have those statistics or analytics offhand, but do you know what the typical age of somebody who's buying houses? I know that's changed dramatically over the last couple decades too, is the generations come up, they're not as interested in buying homes as they used to be.
What I've observed is people are usually in their late 20s to early 30s before they're starting to buy a house. Mm-hmm. They've gotten into their career, they've got steady income, they're starting to have a family, that sort of thing.
Right.
So I'd say it's early 30s.
Yeah. And I mean, I remember talking to my dad and my uncles. I mean, they back in the 70s, they were buying houses almost right out of high school. And that was pretty typical for most people of that I found.
Well, I think back in those days, people became adults.
Yeah. Faster.
Earlier. Yeah. And we've kind of delayed that whole process now.
Probably by 10 years or so.
Yeah, absolutely.
Yeah. I mean, yeah, that makes sense. What are some changes that you would like to see, say, in the banking industry that you feel would benefit the overall economy?
Well, I would love to see things go back to where the regulation wasn't dictating things as much as it is now, because going back to our earlier conversation, regulation forces banks to operate a certain way.
Yeah.
And there's a big cost to that. there's a big cost if you don't comply, and there's a big cost to trying to comply because you have to have lots of training. You have to operate a certain way, and it forces banks into, it pigeonholes them in a way into how they have to operate. So they're not able to do things they might just like to do. So
do you feel like those regulations will change, or you think that this is the way it's going to be? Do you ever see a reversal of the overreaching regulation?
Well, I think right now we've got a pretty major battle going on in our political landscape. It depends on which way that falls.
Sure.
If under Trump and under the direction he was taking things, I think you might have seen some regulation pullback.
Loosening. Mm-hmm.
But with the Biden administration and all that represents, you're going to see more regulation.
Sure.
So which way will we end up going?
Right.
It seems that things are creeping towards the Biden way of doing things. Now, obviously, that's what's happened over the last 20, 30 years.
Right.
So will that reverse itself?
And to be fair, I mean, you had Obama in there too, but you had Bush as well for 8 years. You had Trump for 4. You had Obama for 8. So I mean, the balance has been there, but I mean, I don't know even necessarily versus political party if there's really beneficial changes. And what I'm seeing is, and maybe you can touch on this, is I feel as though regulation, and those certain political parties say otherwise, regulation really hurts the lower class. Wouldn't you agree?
Well, as you well know, the people that make the regulations tend to be people that are moneyed people that have interests, so they're going to try to craft that regulation to benefit them.
Right.
The lower class doesn't have as big a voice in that whole process, so
Right.
their needs aren't paramount in that decision.
Yeah, so everybody, when they're screaming and yelling for regulation, it's really benefiting the top tier of people who are already rich and who are already making money and things like that, which I'm not opposed to.
In many cases.
Yeah.
Now, I'm not saying that there isn't a need for regulation. I'm
Right.
not anti-regulation.
Well, there definitely has to be some form of regulation to some degree.
But sometimes the regulation, even if it's well-intended, it has unintended consequences.
Absolutely. Yeah.
It's called the law of unintended consequences for a
Yeah.
reason. Things, well, we didn't mean for that to happen.
Right.
That wasn't our objective, but inevitably that's what happens.
Yeah.
And I prefer to rely on the open market to regulate itself, but I'd like to see the government put its focus on trying to make sure it's a level playing field.
Sure. Yeah.
Where one can't take advantage over the others, and to promote transparency so that these companies, these industries have to disclose.
Yeah, I mean, it's the same principle of the minimum wage law with there's no greater proponent of the minimum wage law than, say, Amazon and Walmart and things like that, because they can afford to take that, blow, but small businesses can't. They're just like, how do we compete?
It's going to
with
run
that?
their competition out of business.
Absolutely, and they know that. They love that. Explaining that to people, sometimes they can't. 2 and 2 doesn't equal 4 for them, but the end product is the consumer suffers, and so does the employee, really, because $15 an hour they'll keep that there, but 15 years when that's not a livable wage, or not a wage that's,
it'll just keep creeping up.
Yeah,
it'll be a new number.
Yeah,
and these small companies can't afford it. I mean.
Yeah.
They're going to go out of business.
So what is you do commercial loans and things like that? You're pretty safe in what you see. But in business, I know, like, for instance, I was talking to somebody and they were talking about wanting to start a restaurant. A restaurant seems to be everything. And I'm like, that the attrition rate is like 80%.
Yeah, it's the most risky type of business you can get going in.
Yeah. And because I think the costs are high initially, and then, I don't know why people choose that. Oftentimes, it's a passion. They think they got one good recipe or one good thing, and then they just go for it. And I think you can overcome a lot of that just through sheer will and determination based on work ethic. But
let's address that, because that's a good analogy. That whole thing about restaurants, people understand cooking, and maybe they're a good cook, and maybe they make a great burrito or whatever, and people love their burritos. And they can, by gosh, they can go make those, and they can put out a great product that people would love.
Yeah.
And so they have this passion, like you said. But that's a different skill set than running a business.
Absolutely.
So just because you can make a good product doesn't mean you can make money doing it.
Yeah.
And you might have all kinds of demand for your product. You may be like selling out all the time. You may have lines, people, and you're thinking, man, we're so successful. But if you're losing money doing it,
Yeah, I agree. Yeah.
you're growing yourself right into the ground. And that's what happens a lot of times. People don't have the skill sets to run a business.
Yeah, I think, and it's risky in the sense, I mean, some people they have this idea, they take out an SBA loan for $100,000 to $200,000, and they're pumped full of excitement for the first couple months, and then that excitement starts to wane, and it's like, this is reality, this is the real deal. And oftentimes they get burnt out. They don't understand the long hours that it takes to make a business succeed. And all those things, that the grind you have to do, and then their passion peters out, and then they're like, oh.
And no matter how strong their will and how good their work ethic, sometimes you can't overcome some of those obstacles.
Yeah. If there's no need for your product.
Or if you can't make money
Sure.
for your product, So their intentions are good, their efforts good. Man, they're doing everything they can, but they just didn't realize that it was a losing proposition from the get-go.
As a bank, I would think, man, I would look at, I mean, you're really putting a lot of faith in individuals when you give them money. I mean, I know people don't look at it. Sometimes people don't look at it like that, but it's like, I mean, if it was my money and I'm giving, say, $100,000 away, I mean, I'd be like, what are they doing? What are they doing today? What are they doing today? But in reality, it's not like.
Well, let me come back to that. But before we leave the restaurant thing,
Yeah.
I want to say, anybody out there that is considering starting a business, I highly recommend you take advantage of a resource that the government has provided called the Small Business Development Center. And we have one here in our community. It's housed at Midwestern State, and they will help you develop a business plan. And whenever I get somebody who's wanting to start a business that has never run one before, I typically refer them over there and say, well, you need to go talk to those folks. They can help you put together your business plan. And
The SCORE also did something like that.
SCORE was more to work with businesses. SCORE was retired business people.
Right.
Yes. And
Which is a great, awesome organization as well.
yes, and they're both under the
Yeah.
the SBA.
Yeah.
Under an arm of the SBA. Well, if you go through that process, you might go, whoa, I don't know, maybe I don't want to do this.
Does that process cost money?
No,
Bro, it's free.
it's not free in the sense that
Your time.
as taxpayers
Sure.
we're paying for it.
Right.
But to the individual,
To the consumer who's going to
Yeah.
benefit from that resource.
and they can have all kinds of counseling. They'll work with a counselor. They'll give them tons of time. They want you to be successful.
Yeah.
Or if you decide not to go forward, that might be the best decision you ever made, because you don't waste all your life savings that you were about to pour into this thing.
Yeah. And all the metrics and things are showing that entrepreneurship is down year over year, and less people are starting businesses. Do you see that transitioning as of yet into your field?
I can't really gauge that from what I see, because we tend to deal with
And that's a
established
national.
businesses.
That's a national statistic too. It's not just a.
But that's a good segue into your other question, is like all the faith we put into people. What the borrower doesn't always understand is the way they're looking at it versus the way we look at it is a different perspective.
Yeah.
It doesn't mean that their perspective isn't valid. They're looking at it as a cost-benefit calculation. If I undertake this and I borrow the money, I could make a ton of money. They've done the calculations. Maybe they have experience, et cetera, et cetera. They get the benefit of the upside, so they're willing to take the risk. The bank only gets whatever we've contracted in interest. That's it. So if you're wildly successful with your business venture, we don't get to share in that.
Right.
We just get our little bit of interest.
Right.
So, and typically,
That's a great point.
We're taking more risk than you are in terms of the amount of dollars we're putting in it, because a lot of times the borrower just wants to put in 25% equity. They're asking the bank to fund 75%.
And just so people understand, that's the difference of, say, like angel investors and things like that versus that route, like maybe the longer term business plan or a larger business where you actually have shareholders. Then they do have an interest of, hey, based upon your profits, I'm going to make more money too.
Mm-hmm. That's right. They get the upside.
Yeah.
The bank does not.
Yeah, somebody who invested in Facebook in, the first 2 years, like Peter Thiel or whatnot, I mean, they became billionaires, or they were already billionaires, but more billionaires.
But they decided, I can afford to risk this money.
Sure.
And it's worth the risk to me.
Yeah.
The bank, we've got to know that we're going to make our money back. We've got to protect our depositors. We can't afford to be taking risks. So
that would pigeonhole in some ways. I mean, you're not just going to fund every new startup business either.
Oh, no.
Yeah.
We're going to look at the ability to repay the loan. That's what we're looking at.
Right.
Now, it doesn't have to come from that business venture. It might come from another source.
Sure.
So
Money
we're looking at that.
Yeah.
We're looking, and collateral's the last thing we look at. People think, well, you got collateral. Well, collateral tends to be a losing proposition by the time you've repossessed it.
Yeah, because you have court costs and all that things.
And we're not the best in marketing it, and there's going to be downtime. There's going to be maintenance, whatever. It tends to lose a value. So that's really our last source that we look to. We want to look to proven sources of cash flow, and that's either maybe you have another job. Maybe you're an attorney and you have a good income, and your wife's going to start a little job over here. And they're going to start a little business. If that business fails, well, that attorney's income could pay it. So we're looking at that.
Everything.
So if we decide to make that loan, that doesn't mean we're endorsing that venture. We're not saying, hey, we think this is a good idea.
You're just saying we think we can get paid back.
We think we can get paid back. That is our bottom line calculation.
Absolutely.
Conversely, if we decline the deal, it doesn't mean that we think it was a bad idea. It doesn't mean that we think you couldn't be successful or that you shouldn't go into that venture. We're just saying we can't get comfortable that we're with the certainty that we're going to get repaid.
Yeah.
And there's not enough assurance of that. So it's a different calculation altogether.
What if you were to address the audience and people who wanting to start a business? The Business Development Center, is that what you're saying?
Yes,
and that's a nationwide
Small Business Development Center.
And that's nationwide.
SBDC, yes.
Okay, that's the first step they should take.
I think it's one of the first steps. Yes.
Yeah, and then they can determine based on that. Okay, this is a real go or not. What about people just wanting to borrow money for investors? I mean, that's another avenue. It's a little bit different approach of, say, than starting just a traditional business like brick and mortar or whatever business that form that takes. But, typically investors, they'll buy properties and things like that. You have some experience with that. Do you see that portfolio has grown based upon the economic conditions now? Do you see that shrinking in the future? Housing in general? I mean, what are your thoughts on that?
Well, we're kind of in an unprecedented time, at least in Wichita Falls, where we're based. Historically, we've not had the frenzy of real estate purchases that we've been seeing. Right now, I understand that we have about 1.1 months supply of houses available, which means people are fighting over them.
Yeah,
and the prices have gone.
And that's happening throughout the country in specific areas.
Yes, it's unique. It's kind of unprecedented here.
Are they finding people moving from out of state into Texas? Is that what the contributing factor is? Or
anecdotally, I'm hearing that.
Yeah,
but also, we just didn't have a big supply to begin with.
Right. So we have a housing shortage, which I never saw that when I first moved to Wichita Falls over 3 years ago. You typically don't think. I think it kind of caught even our community off guard, but the country overall as a whole, they're like, and maybe I don't know if COVID of 2020 kind of like shine the light on it, saying, hey, and there was just this huge lull in building and things like that. So just through several circumstances, everything just halted.
Yeah.
And then getting that industrial and that economic train moving again has been kind of slow going.
Well, and I think we're kind of in an artificial environment right now with all the stimulus money and with the COVID stuff going on. It's just unreal. It's not even hard to get your arms around why is all this money flowing
Right.
when people have been out of work, when businesses have been shut down. It's not like new businesses are starting up in our community.
Yeah, it's kind of weird. It's like, where is all this money coming from?
Yeah.
It has to be coming from the government.
Exactly.
Yeah.
And it could be some people moving in.
Yeah.
And some of that is
Great.
but it's also a result of some political
Sure.
shifts,
Yeah.
them trying to get out of areas of the country that they're unhappy with and moving to Texas. So we're the beneficiary of that, but it's artificial. It's
Yeah.
not going to last forever.
How long? What do you think? How long that? I've heard different. Heard people say that some changes. We'll start seeing some changes fall of 2023, which is a couple years away. Some say it'll be spring of 2022. What are your indications? What are your thoughts? I mean, because they're still saying that even for them to meet the current demand, I mean, we're like a year and a half out, which would put us fall of 2022.
There's so many variables. There's no way to predict it.
Sure.
Again, the political battle that's going on, that's going to have a major impact on what direction things go.
Yeah. And people often say, hey, politics don't matter in the grand scheme of things, but they really do. Absolutely.
They do.
Because based upon regulation, based upon movement, based upon policy, that really indicates, and the growing divide between conservative and liberal, not even necessarily Republican and Democrat, but just that divide of ideals and freedom and things like that, that has great implications. I mean, that's why Texas and Florida are booming, and, and then you see other areas of the country that are being hit that they're just shutting down. During the shutdown, did you feel that the banking industry, did that kind of take a lull? Did everything just kind of pause?
Well, it was interesting because, yes, it was a lull in terms of organic activity, but then we had the PPP, the payroll protection loans that hit, and that kept us really busy.
Okay.
And it was a good deal for the banks because we made a commission on all that. And
so it kind of kept you guys afloat.
It kept us afloat too.
Yeah.
And then you start seeing all that money flowing and turning, and then so other things start happening.
Yeah.
And we get back to the investment properties. Investors start seeing opportunities to, and they're coming to the banks. They want to buy properties, and they're flipping, and they're buying for hold or whatever. So yeah, we're doing a lot of that right now. But I do think it's going to cool down.
Sure, has to. I mean,
yeah. And another factor we haven't mentioned is how low interest rates are for mortgages, home mortgages.
and do you feel like I don't know if they can change that though?
That tends to be a function of the investors that fund those, and the hedge funds and all that stuff.
Do you feel like interest rates could realistically go up without just crashing the economy?
Well, it depends on how they manage it.
Yeah.
If it's managed up, maybe you could avoid a crash. But see, the thing like I believe Trump was trying to do was grow the economy where it was like a big train engine that was just fueling the economy.
So they had the cash flow coming in.
But if you're not doing that, and rates are going up, man, that's going to be a bad combination.
It's a double whammy.
Yeah.
Yeah.
And we could see that happen.
Sure.
So
what advice would you give business owners right now?
Well, I think it's always good advice to not overextend yourself, not get over leveraged.
Yeah.
To have some reserves, to have a contingency plan. Don't assume that just because things are going well
that they always
will. And I'll tell you, that's one of the things I've seen on startup business owners. They do a plan, and they're assuming everything is just going to go just right.
Yeah.
And inevitably, something's going to come up that they don't anticipate.
I tell everybody to make a 1 year, 3 year, and 5 year plan because things can change after a year. Things can change on a moment to moment. I mean, COVID, they shut down the economy. They shut down this country in a matter of 2 months. It was done.
Right.
You know, I mean, I think I was hearing the statistic that something like 60% of the restaurants in LA like shut down for good. You know, I mean, there's all kinds of things, and I don't know if that statistic is true or not, but that's just one of them I heard. I mean, I know the carnage was astronomical.
Well, even under normal conditions, there's one thing you know for certain on your projections: they're going to be wrong.
Yeah. That's a great point. Yeah,
they're going to be
They're
wrong.
never right. Yeah,
There's going to be some aspect of it that you miscalculated.
sure.
And there's going to be something come out of left field, and you've got to be prepared for that.
Yeah. Yeah. Well, I really appreciate you coming on. I think you've given some fantastic advice and some insight to our listeners and to people who might be on the fence of starting a business or not. They just have some things to think through. I think things are always changing. And I'm a risk taker. I think that you have to some degree, you have to be a risk taker to some degree to start a business even. But just bet on yourself. Just know what your product is and things like that. But
let me say this real quick.
Yeah.
I think it would be beneficial for a prospective business owner or even a business owner that's just kind of getting started, develop a relationship with a bank.
yeah,
Get to know a banker. Get to know the personality of that and the culture of that bank, and make sure it's a good fit for you.
Sure.
Because then when you're ready and you need money, you're not standing flat-footed, and they're like, "Well, who are you?" And
You're right.
Tell us about you.
Yeah, when you need money and you need money now, it's going to be hard to get that when you need it if you haven't just developed that
And
relationship.
you can develop the relationship ahead of time.
Sure.
And I'm always willing to visit with a prospective business owner or somebody's wanting to do something. If they want to make an appointment and come in, I'll be happy to.
Yeah, we'll
give
put your
my
email in the
perspective.
link below and all that stuff so they can get a hold of you. If need
Okay.
be.
Yeah,
So,
I'm at First National Bank. We're over on Fairway.
yeah. Well, I appreciate you coming in.
Okay.
It's been a pleasure. Thank you
Thank
so
you.
much for all your knowledge.
Good.
All right.
Thanks for having me.
Yeah, no problem.